It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
So yeah, we're going to just talk a little bit about Nuvei because I saw a press release yesterday and I've had a lot of questions on it already. It's a release talking about how Ryan Reynolds has invested in Nuvei Corporation. And there's always, a lot of buzz whenever you hear about a famous person, whether they're famous for being an investor, athlete, or whatever, but being associated with a company and investing in that company. So my thought is, I've never seen a Ryan Reynolds movie that I didn't like. My thought was, does he know what he's talking about? I mean, is he an investor that we should listen to for advice? So I did a little bit of research.
Have you seen The Green Lantern?
I have not seen the Green
Anyways,
Lantern. I never said that I've seen
even he reps it. Yeah, even he reps it. No, I enjoy the movies, his movie.
But anyways, does he have an inside track? Does he know something about the company that we need to know? Is he an investor that we should listen to? So I did a little bit of research. I thought I would just take the words right from his own mouth.
Are you a fintech guy, though?
No, I know nothing about fintech. Thank God. Thank God I'm not running the company. My job is storytelling. I think at Maximum Effort, our job would be more defined in not necessarily financial investment, but emotional investments.
Okay, I don't know what emotional investment really is. So I'll say that probably I'll continue to watch Ryan Reynolds movies. I don't know if I'm going to take my stock recommendations and financial advice from him. But regardless, let's just take a look at the company here. Nuvei Corporation trades under the symbol NVEI on the TSX and on the NASDAQ. So on the TSX in Canadian dollars, trading at about $57 per share, 8 billion market cap company. It's a pretty big company for Canada, especially in the technology space where the Canadian market is very weak. So what do? Well, Nuvei provides a technology platform that enables businesses to accept various payment methods, issue cards, access banking, risk, and fraud management services. So it's a fintech company, one of or potentially the largest in Canada. Now, if you look at the performance over the last couple of years, the company just became public in 2020, towards the end of 2020. And like most tech stocks, had a huge run up for most of 2021. It had hit a price around November, October of around $170. And since then, it's been mostly downhill. Now, this is pretty typical chart pattern for the technology sector, both in Canada and the US, but trading for, as I said, about $57 right now. So a big drop since the end of 2021. Taking a look at the recent financials, Q4 and the full year results were issued a few weeks ago. Revenue or volume growth was strong in Q4, up 28%. Revenue growth only about 4%. Adjusted EBITDA was down 6%, and adjusted EPS was 47 cents, unchanged year over year in the quarter. The full year results were a little more impressive. Volume growth up 34%. Revenue up 16%, adjusted EBITDA up 11%, and then adjusted EPS of $1.86, up 10%. These are all in US dollars as well. Now, historically, as I'd said, the company just went public in 2020. We only have 3 years of financial performance. Historically, what I'm seeing is a company that has a track record of growth, at least for the last couple of years, as well as a track record of profitability. But I will note that growth had slowed in 2022. So volume growth slowed down to 34% from 121% in the year before. Revenue growth, again, 16% in 2022 compared to 93% the year before and 53% the year before that. EBITDA as well, growth slowing in 2022 and margins declining just very slightly. The company did issue guidance for 2023. So for volume, they're expecting growth in the range of 52 to 57%. They are expecting strong growth in revenue for the year, about 45 to 50%, and as well strong growth in adjusted EBITDA from 29.6 to 35.8. Now, it is important to note that most of this growth is going to be coming from an acquisition. the Paya acquisition, which was completed in February for $1.3 billion. So this is essentially, where the company is getting the majority of that growth from. It's not organic, and we have to consider that because we can't just extrapolate that high level, that guidance in 2023 going forward. But the company has issued a medium-term growth target, and they're estimating that revenues are going to grow at an average rate of about 20% annually year over year for the medium term. I would take the medium term to be the 3 to 5 years. That wasn't specified. They're looking at adjusted EBITDA margins of 50% plus, which would be an improvement. Now, one thing that is important to note is that the acquisition of Paya actually reduces the medium-term growth target. So whereas before they were estimating 30% annual revenue growth, that has now dropped again down to 20%. Valuation. So if we look at the enterprise value to EBITDA based on the acquisition and the guidance, we're looking at probably the 12 to 15 times. Now, if you just base it off of the balance sheet that existed when the fourth quarter ended, you're looking at about 12 times, but they've added debt since then. Price to adjusted earnings for 2022, based on 2022 reported adjusted earnings, it's at about 23 times. They haven't issued earnings guidance. So, we would expect that, I know that the company is expecting, and analysts are expecting earnings growth in 2023, but we're still going to be looking at about 20 times multiple on a forward basis. So what is our take on Nuvei? Well, generally speaking, strong fundamentals, strong revenue growth, EBITDA growth, consistent profitability. They also have positive guidance. Analysts are expecting growth in earnings as well. However, we do need to note that growth has slowed. EPS, or earnings per share growth, has been significantly lagging the revenue growth. And the valuation is not particularly cheap, especially when we compare this to a lot of the big US tech names that have pulled back as well. Now, 20 times, I would not consider that expensive. I would not consider it especially cheap. But given the fact that earnings growth has slowed, or growth has slowed generally, we have to consider that. 20% revenue growth is still impressive, but if earnings growth is going to lag that significantly, then at the very basic level, this would be fair valued. So what are our next steps? Well, we don't have any near-term plans to purchase or recommend the company, but we would continue to monitor it, see how the integration of Paya goes. Now, whenever a company acquires and starts to integrate another very large company, when it's a large acquisition, there's always risk involved in that. Is the integration going to go as planned? Are they going to be able to deliver on the synergies? A lot of times what you will see is revenue and overall EBITDA, even overall earnings, will grow quite a bit, but earnings on a per share basis, or free cash flow on a per share basis, will not. And it's really that per share free cash flow and earnings that we consider to be the most important metrics, because that's what you own as an investor. You own shares. Just growing the absolute size of the company often only benefits the management team. So our advice, our main advice here is, don't buy stocks just because they're owned by famous people. Ryan Reynolds, it seems like he's becoming more of a spokesperson for the company. This isn't say anything necessarily about his financial knowledge of it or his knowledge of the industry. As we heard, he confesses that he knows nothing about fintech and he's not a financial guy. So I love him as an iconic Canadian actor. I'm definitely going to watch Deadpool 3. But in terms of getting my financial advice, I think that I'll look elsewhere.